Alright, what's up everyone? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And as always, every Friday I make a video just like this, which will show you all the trades and all the adjustments I made this past week. So welcome to the next episode of my live option trading series, and this was a pretty busy week, so let's get right into it. And so in this video here, I'm first going to show you a few new trades I put on in Gamestop and also in Alibaba, which already came off for a profit yesterday. I'll talk about that later. And you're also going to see how I made an adjustment in my Beyond Meat position. And then towards the end of this video, I'll walk through all my current positions that I have on. I've got quite a few updates to give you, and that's because there was a lot of stuff that happened this week. Now, as always, before we get started here, in case you are brand new to the channel, I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, and so with that being said, I'm going to stop here and play a few clips that I recorded from this past week that again will show you those few new trades I put on in GameStop and also Alibaba, and then show you the few adjustments I made as well. So let's get started. Okay, today is Monday, December 6th, and a few updates I want to give you here this morning, specifically regarding Alibaba and also Roku. So if you saw last week's live option trading video, then you will have seen that I did have existing positions on both of these stocks. So for example, if you come to the trade tab, and I already have Roku pulled up here. So up until last Friday, I was short the 222.5 strike put option. And on Friday morning, I did take this one off for a full profit because I was also short 100 shares of the stock as well. And then a few hours later, right before the market closed, I did sell a new put option contract at the 195 strike. So this was something I was not able to record because again, I did this right before the market closed on Friday. And then I did the same exact thing with Alibaba. So if we come to BABA, same thing up until last Friday, I was also short the 130 strike put option. And then a few minutes before the market closed, I took this position off for a full profit again because once more, I was also short 100 shares of the stock. And then finally here, just to make things a bit more complex, after I took off this position, I put on a new one. And for that trade, I sold the 105 strike put option. And this is the position that came off this morning for another full profit. As you can see here, I bought back one contract to close of the 105 strike put option. So again, another very nice and pretty quick profit here in Alibaba. And apologies there if that was a bit confusing. I just happened to do a lot of stuff very quickly before the market closed on Friday. And especially with trading the same exact stocks with the same kinds of positions once again, it all kind of blended together. But bottom line, the reason why I did all that is if we come to the charts real quick here, I already have Alibaba pulled up. And let's zoom in. So the reason why I basically reloaded and retraded Alibaba and Roku is because the implied volatility for both of these stocks still remains very, very high. And therefore the option prices on both of these stocks still remains very, very high. So even though today, as you can see here, the implied volatility for Alibaba has come down a little bit, we're still seeing an IV rank of 75% and also an IV percentile of 100%. Which basically means the current level of IV at 94%. This is the highest it's been for Alibaba over the entire past 1 year, with the exception, of course, of this one day where it peaked. So fact of the matter is, Alibaba is still showing a great option selling opportunity. And therefore, for the third time, I'm going to come back to the trade tab here and place a brand new position. Now for this position, because Alibaba is up so much today, right now it's up almost 7%, I'm not going to sell just a simple naked put option. Instead, I'm going to sell a bullish skewed short strangle, which basically means I'm still going to sell an out of the money put option, probably the 110 strike here, but I'm going to make sure the delta on the put option at 27 is going to be significantly greater than the call option I sell. So for example, I might want to sell the 134 strike put option, maybe the 133 at the lowest strike, but something somewhere around here. So let's start with the 133 strike call option. Go ahead and right click and go to sell and then strangle. And we'll see what kind of premium I can collect on this position here. And there we go, down below is the order. Sell one contract of the potentially 133 strike call option. And then also at the same time, going to sell one contract of the 110 strike put option, which is right there. And right now the total premium I can collect for this trade is about $482. That's pretty nice, especially when you consider I'm in the December expiration cycle with only 11 days left to go. So very little time left, but I can still collect a pretty hefty credit because the implied volatility for Alibaba is still so high. So I think that looks good to me. So we'll go ahead and click on the confirm and send button. Buying power effect for this trade is about 1,400 bucks. That's totally fine. So we'll go to send. And there we go. Just got filled at 485. Very nice. So there we go. I'm now locked and loaded for the third time on this stock in about 1 or 2 weeks. And of course, last step here is to create my automatic buying order to buy these contracts back for a lower price. So very briefly, let me go ahead and do that here. And there we go. This is the order. Going to buy back one contract, 133 strike call option, and then also buy back the 110 strike put option. And as usual, I will do so for half price. So half of 485 is about 242. I'll come down to 240 and then make it a GTC order. So it's always in place. Confirm and send, all done with this trade here. Okay, today is Thursday, December 9th, and one trade I'm going to make here this morning is going to be in Gamestop once again. So this trade here is going to be a very quick one right before the December expiration date, which is only about 1 week away. So basically for this trade here, my main intention is simply to take advantage of the still very high implied volatility for the stock here. So let me go ahead and zoom in a bit. And even after their big earnings announcement, I believe yesterday on December 8th, the implied volatility for the stock is still at 122%. And as with most earnings announcements, once those figures become public, you do expect to see a nice crush in the implied volatility thereafter. And also as a result, a nice crush in the option prices. But still, given where the IV is right now, I do think there is still plenty more room to the downside for implied volatility to contract. So now if we come over to the trade tab, we can take a look at the option chain on Gamestop. Again, I'm in the December expiration cycle with only 8 days left to go. And for this trade here, I'm just going to sell a delta neutral short strangle. So that means I'm going to sell both an out of the money call option and also an out of the money put option, where the delta on both contracts is going to be about the same. And I'm thinking of selling the 145 strike put option with a 19 delta alongside the 190 strike call option, also with, or almost a 19 delta, has an 18 delta. So again, that makes this trade here basically directionless, or I'm directionally neutral. I don't care if GameStop goes up or down. Again, with this trade, I'm just trying to take advantage of the still very high implied volatility for the stock and also take advantage of some very fast time decay, right? Because with only 8 days left to go until expiration, assuming both these options stay out of the money, then they have to go to zero, or their prices have to go to zero. And right now, just for this 145 strike put option, the theta value for this contract is 41. So right now, all else being equal, the price of this contract is going to fall by about 40 bucks every single day. That's quite a bit. And same thing for the call option here. The theta value is also 41, so this option will also fall in price by about 40 bucks every single day. And so everything looks good on this trade here. So go ahead and right click on the call option, go to sell and strangle. And here we go. This is the order. Going to sell one contract, 190 strike call option, also sell one contract, 145 strike put option. And the total credit I can receive for this trade is about 500 bucks. That's pretty good. So I'll come down a little bit and try and lock in a price of exactly 500 bucks. Go to confirm and send. Buying power effect is about 1600 bucks. That's fine. So lastly, we go to send. And there we go. Just got filled at 507 actually. Very nice. Okay, and then for this trade here, because again, we are so close to the expiration date, I may be inclined to hold it all the way to expiration and perhaps make the full 500 bucks here. So instead of setting a GTC closing order to take my profits at around 50% like usual, in this case, I'm going to set an alert. Basically an alert that will notify me if the price of this whole position here falls by 50%. And should that happen, I can come in here and take a look and see if I do want to go ahead and actually take off the position for a 50% profit. Or if maybe by that time there's only 1, 2, or 3 days left to go, I might just want to hold it all the way to expiration. So now I'm going to right click on the option here and go to create alert. And that brings up this dialog box here. And first thing I need to do is change the spread. So I'm going to go to strangle, of course. And then now in this box, I can configure the exact expiration and strikes that I just chose for my position here. So the expiration is fine, but on the call option, I sold the 190 strike. So going to select that one there. And then for the put option, I chose the 145 strike. Great. And then the last step is to configure the actual price. So half of 507, the price I got filled at, is about 250, just rounding down a little bit. So now this alert will go off if the mark price of this entire strangle is at or below $2.50 on a per share basis, or 250 bucks in total. So finally we'll hit create and we're all done here. Now also in this video, I do want to make an adjustment on my Beyond Meat trade. So we'll come to the option chain for that. And so what I'm going to do here is roll down my call option to collect additional credit. That's because this stock has bounced through my short put strike quite a few times, and I have lost some money as a result of that. Because basically what happens here is, should the stock fall below my put strike at 71, I will short the full amount of shares to cover these put options. So specifically because I'm short 2 contracts, I would short 200 shares. And then should the stock reverse and go back above my put strike, I'll buy those shares back for a small loss. So therefore, if that happens many, many times, if Beyond Meat just bounces through this put strike over and over and over again, I'm going to lose a decent amount of money. And therefore, to compensate for that, again, that's why I'm going to roll down my call option and collect additional credit. So for this adjustment right here, I'm going to roll down my 78 strike call option down to the 75 strike call option. And the way I'm going to do this is right click on the 75 strike call option and go to sell and then vertical here. So basically I'm going to place an order to sell a call credit spread. And as you can see down below, I'm going to sell 1 contract of the 75 strike call option. And then also by placing this order, I'm going to buy back the 78 strike call option, which I currently have on right now. And then again, because I'm short 2 contracts each, I'm going to sell 2 of these. And now if we look at the credit received, it's going to be about $50 per spread. So in total, that's an additional $100 or so of credit. So that's very nice. We'll go to confirm and send. And there we go, just got filled at 54 actually. Got price improved a little bit. And so now with this alter position on, I do have to be careful about my new 75 strike call option, because should Beyond Meat totally reverse and go from a price of $71 per share where it is right now and rise above 75, then in that case, I'm going to have to cover my call options. And to do so, I will have to purchase 200 shares of stock. But of course, we will only cross that bridge if we need to. Okay, welcome back. And so now finally in this video, let's go over all my current positions and I'll give you some updates about each one. So starting off first with Roku, this was the biggest problem I had this week, and we'll come to the charts real quick. I already have Roku pulled up and we'll zoom in. So initially, earlier this week, I had on a short strangle on this stock, where specifically my short call strike was at the 227.5 strike. So somewhere right around here. And in particular, it was on this day where I had some huge problems. Roku gapped open by over 10% and then continued to climb higher after that. Now, usually when a stock gaps over my strike, it's not a huge deal, at least if the gap move is not too much, because I could still, in this case, buy 100 shares of the stock here to cover my call option and perhaps also roll up my put option to take an extra credit to compensate for that gap move and carry forward. But unfortunately, with this gap move, it was just so large. Roku opened so far above my call strike that I had no choice but to simply close out the entire position for a pretty nasty loss. And that loss was around $1,200 or so. So that was definitely a bit painful, but I'm still on track to having a pretty decent month for December. And then also, once I close that trade, if we come to the trade tab real quick, once I close that short strangle on Roku, I put on an entirely new position. And for this one, I just sold a naked call option at the 247.5 strike. So basically, I was trying to fade that massive up move. And now as of today, this trade is finally working in my favor. As you can see, Roku is coming back down a little bit here, but there was a few moments where Roku was bouncing through my call strike a few times, and so I have lost a little bit of money from that happening, but still not enough to warrant even making an adjustment on this trade quite yet. And also, I sold this call option initially for about $950, and so therefore, if I typically take my profits at 50%, that means I'm trying to make around $475 on this trade here. Definitely not enough to cancel out the losses I took on Roku earlier this week, but still enough to cancel out maybe a third. And that's simply the main goal with this trade here. I'm just trying to cut down those losses by a somewhat decent amount. And so with that being said, that is my Roku position now. Coming back to the monitor tab. Next up, we have my Beyond Meat trade. So this position here, you saw me adjust in one of those previous clips. And so if we come to the charts real quick and go to BYND, and it looks like that adjustment is working out pretty nicely so far, because Beyond Meat is down by almost $4 right now. So therefore, I'm making some nice profits on those new call options I rolled down to. And then also because I'm now short 200 shares of the stock, because of course it's below my put strike of 71, which is right around here or so, then right now this position is in a pretty good state. And so that's Beyond Meat, and we'll come back to the monitor tab and go to the next one, which is going to be AMD. Now this trade here started out as a short strangle where I was short the 160 strike call option, as I still am now, but also I was short the 130 strike put option. And so in a very similar fashion to what I did with my Beyond Meat position, I rolled up the put option in this case, not the call option, but still I rolled in one of the options to take in extra credit. Now since doing that, AMD has plummeted quite a bit, all the way down to right now at 137 bucks per share, 10 bucks below my put strike. And so of course that's why I'm also short 100 shares of the stock as well. And therefore when you add all this together, this position is looking pretty darn good so far. And so even though I have not quite yet hit my profit target with this trade, I am getting pretty darn close. Next up we have my CPE short strangle. This is Kellan Petroleum Company in case you're not aware. And funny enough, this trade went against me in a huge way pretty much the day after I put it on. So as you can see, I am short the 75 strike call option, also the 55 strike put option. I have not made any adjustments to this trade yet. And that's because if you come to the charts real quick here and go to CPE, and we'll zoom in a little bit, I believe it was around this day, somewhere in here where I put on that trade. And then like I said, pretty much the very next day, boom, the stock totally plummeted and it has been below my 55 strike put option ever since. So of course that also means for this whole time here, I have been short 100 shares of the stock. And also given that this trade will end next Friday on December 17th, I believe, that's the expiration day, then that means I simply have to hold on to it for one more week and hopefully still make a full profit. So that's CPE, and we'll come back again. Next up we have my Gamestop position. This one you saw me put on in one of those clips, right? So no adjustments, no anything yet with this trade here, and so far not looking too good. I'm down by about 220-ish bucks. And that is because the stock is selling off further and getting a bit close to my put strike, but still, nothing to do here, no adjustments required yet, and again, only 1 week left to go. And then lastly here, I have my NUE short strangle. This one has also given me a pretty hard time, just like Beyond Meat. So I have already made one adjustment to this position by rolling down my call option to the 114 strike. Initially, I sold the 125 strike call option, so of course that means I have been losing some money from the stock bouncing through my strikes quite a few times here. And then actually one more trade to go over, and that is my Alibaba short strangle that I mentioned earlier and that you saw me put on in one of those clips. So we'll come to BABA. So like I said, for this trade, I've already taken off for a full profit. And that's because one, the stock has simply been moving sideways for the past couple of days, hasn't gone really much higher, hasn't gone much lower, just pretty much sideways. So therefore the time decay on the options I sold was very effective. Right? If the stock is not moving anywhere and also we're pretty close to the expiration day, then time decay is going to eat away at the value of those options very, very quickly. And then also on top of that, if we come down here to the implied volatility chart, if I could expand it here, there we go. We're also seeing a continuation in the contraction of implied volatility. So this also is reducing the value of the contracts I sold. And so therefore, when you add those two things together, that's what allowed me to buy those contracts back for half price after just a few days and walk away with a very nice profit. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.